What if I told you one of the best performing stocks of the last decade isn't a tech giant, isn't an AI company, and doesn't even sell a product most investors get excited about? It rents out work uniforms, it cleans floor mats, it refills first aid kits, and over the last 10 years, it has crushed the S&P 500. Today we're going deep on Cintas, ticker CTAS, and I'll walk you through why this so-called boring business might be the kind of compounder serious investors quietly love and what the current pullback could mean. Quick note before we dive in. Everything you're about to hear is my own research and opinion, shared purely for education and entertainment. This is not financial advice. Stocks go up, stocks go down, and the decision to buy or sell is always yours. Cintas trades on the Nasdaq under the ticker CTAS. It sits inside the industrial sector, specifically specialty business services. It's a large cap name, worth around $70 billion, and while its revenue is loosely tied to the economy, the business model is unusually steady. We'll see why in a minute. My one-line thesis on Cintas is simple. It's a highly predictable, recurring revenue compounding machine, and the recent price pullback may be giving long-term investors a more reasonable entry into a business that almost never goes on sale. Let me defend that statement with the numbers. So what does Cintas actually do? At the core, Cintas is the largest provider of uniform rental and workplace services in North America. It serves more than 1 million businesses across the US, Canada, and Latin America. It designs, manufactures, cleans, and delivers uniforms, but it also runs 4 overlapping service lines: uniform rental and facility services, things like floor mats, mops, restroom supplies; first aid and safety, which is its fastest growing segment; fire protection, extinguishers, sprinklers, alarms; and direct sales of uniforms and gear. Most people see a Cintas truck and think uniform company. The reality is, Cintas is a subscription logistics business wearing a uniform company's clothing. Here's what makes this business special. Roughly 80 to 85% of Cintas's revenue is recurring. It comes from contracts that automatically renew week after week. Once a business signs on, switching providers is a nightmare. You'd have to resize every employee, rebrand all the garments, renegotiate prices, and reschedule deliveries. So most customers don't switch. Cintas keeps about 95% of them, and the average client stays for more than 10 years. That kind of stickiness is what gives this stock its compounder reputation. Now think about the physical footprint.